If you're a marketing agency that focuses on any sort of performance marketing or social media marketing or anything related to anything online, you may be losing out on this major chunk that is affecting your cash flow. You see, usually when you're raising an invoice to a client, you're used to them cutting 10% on your entire invoice amount. Now, that usually amounts to a huge amount of cash flow that is stuck with the client that they pay back to you in the form of TDS, which you then reconcile when you're doing your TDS 26AS reconciliation. And there's where the problem happens. 10% of your cash flow is essentially held back by the client, which is not released to you until you do your income tax filing at the end of the year. But here's where the twist comes in. Under Section 94C, when it comes to TDS, usually for any kind of service where you are using any form of technology, for example, if you're doing performance marketing, you're using the back end of Facebook Ads Manager, etc. to run ads, there only 2% of TDS is legally supposed to be cut. If you're not already doing this, you need to renegotiate this with your customers because then 2% seems like a much more smaller chunk of cash flow being cut as compared to the general standard 10%. So be vigilant about this. Check this if you're a marketing agency and ensure that actually if only 2% needs to be cut versus 10% and track that at your end. DM agency and we'll send you a breakup of what kind of services should your clients cut 2% on versus what kind of services should they cut 10% on.